Welcome, everyone, and welcome to Office Hours for Traders Post on April 19th, 2024. April 19th, that's my father's birthday. I have to message him. Thank you very much for being here. This is Office Hours, where we answer your questions about Traders Post every week in order to make sure that you're getting the support that you need and to make the platform better. We use your feedback, we use your questions in order to guide the development of this product so we can become the best automated trading platform for you and your services. I'm Tom Hartman. I work for the marketing team, and of course, I'm here as ever with the intrepid Mike Christensen, CSO and co-founder of Traders Post. How's it going, Mike?
Doing well, Tom. How about you?
Pretty good, pretty good. Last 2 days, I've had the best trading I've ever done with crypto.
Awesome.
Which means one, I didn't blow up my account, and two, I made a little bit of money, which to me is like, oh my god, I made money. I'm like surprised when that happens. Pretty interested.
That's fantastic. Glad to hear it. I wish I could say the same. I'm nursing a little bit of a drawdown right now. Hopefully, I can recover that in the next several weeks, but it's going to take a little time to claw back.
Well, I'm going to take I'll give you back the same advice you gave to me that helped me lower my position size.
I did. That was the first thing I did. Yep.
I'm sitting there and I had increased the positions, double the position size, because I'm like, no, now this trade is going to be perfect. And I just had you in my mind. We had just spoken like an hour before. I was like, what are you doing, Tom? Lower it. And I was like, but there's no way I can make enough back if I don't double it. And this is the angel on both sides. Turns out
that's the loss chasing. The loss chasing, as we talked about. Yep.
It was perfect. All right. So this week we've had actually pretty decent questions this week, but I do want to start off with a couple of points that I want to bring up that came up. First is for phone support for Traders Post, right? So phone support is something that we do offer. You can see that on our website. But I just want to reiterate here that we are a startup. We are fairly new, and the phone support shouldn't be your first line of support, right? There's one person answering the phones, and it's only in certain hours, and we try to reserve those things, those phone calls, for when there's a problem that just wasn't able to be resolved by email. There's just a little bit too much back and forth, and might be easier that way. And so there is sort of like a ranking of, hey, if this can't be solved by writing, then we'll see if we can take the opportunity to schedule a phone call. So I just wanted to clear that up, because some people are like, well, I bought the subscription, I expected to call someone 24/7, and that's not something that we can expect.
Yeah, we should also clarify that the phone support is only available on the Pro and Premium plans. So if you're on a starter plan, it's not inherently provided. What we're seeing at the moment, and this is kind of startup pains or high quality problems, as I'll call them. We're getting so much support. We're growing so fast that our main support guy, Cameron, is actually kind of bursting at the seams and is struggling to handle as much support as possible. So we're getting more time in front of him, expanding his role. We're looking to add to the support team as soon as possible. But in the meantime, I think we're rethinking how phone support works, mainly because it's one of those things where it's hard to multitask between support tasks if since you can only take one phone call at a time. So we want to keep the phone process going, because Tom is right. There are circumstances where it's just easier to speak to somebody. But we think what we might transition to is more of a scheduled approach, where you can schedule a call and Cam can reach out to you. Or one of the either myself or John can reach out to you as well in moments of high demand. So that's kind of the update on phone support. We're sort of rethinking how to make sure that we're delivering a high value, high quality experience, but also manage the resources of our team effectively.
That's right. And if you're sending in a support ticket, I mean, I don't think I've ever seen a support ticket like not be answered. Like, everyone's constantly in there, and then we get to share the information. Multiple people get to weigh in, and so then when you get an answer, it's less. It's not something you're going to get off the cuff. It's usually 2 or 3 people have already gone through the idea before it's provided. So support emails is the way to go. You could always go to Discord. There's a lively community there, and sometimes you'll get your question answered by someone else who's faced that before. So that's useful as well.
Yeah, and I will remind everyone again too. We've trained all of our documentation, which we update regularly, on an AI model, an open AI model through Gitbook, which is where we host our documentation. So in the dashboard of Traders Post, you can ask the documentation questions. You can ask questions within our documentation page, and all of those are trained on that information. So for the most part, I think you'll find that the answers are going to point you in the right direction. If something seems a little off, though, of course, reach out to us via support.
Perfect. The second thing I wanted to mention here is the webhook URL. So just something to for TradingView specifically, when you're creating an alert, and here I'll share my screen so we can see it. When you are creating an alert and you enter in a webhook URL. So let's say we were to add one here. 1 second, let me share my screen. And you were to add a webhook URL. What'll happen here is that this text will save here. It'll save in this field so that when you go to create your next alert, the webhook field will be pre-populated. So you want to avoid doing that, or you want to keep that in mind, that when you are entering a webhook for Traders Post, and it's there the next time you're doing something, and we've seen this where people are on another chart, they're trading something else, they create the alert, and all of a sudden they forget that the webhook field has already been pre-populated, and boom, a message can get sent off. Now, normally, unless the payload is not the JSON payload, the message that you have in your field is not the same, it's not such a big problem. But it can be a problem if you are running multiple strategies on Traders Post, and you forget the signal is being sent to the incorrect strategy, the incorrect subscription. And so in that way, you have a trade that happens in a wrong account that doesn't have the same sort of settings for it. So you really want to keep that in mind.
Yeah, I appreciate you bringing that up, Tom. It is a frustration of mine as well. I find that I often forget that webhook tab because it is kind of tucked away and hidden in the alert settings. I wish that TradingView had a setting that said "Don't remember webhooks," because as convenient as they think that might be, it's very inconvenient if you're working with multiple webhooks, and then you end up sending the signal to the wrong place. Or, as is often the case, because we see a lot of these alerts come through, you go to create another price alert or an indicator alert, and that webhook URL is attached to it. And then Traders Post gets a bunch of alerts from people with things like price cross this area, and it's not a JSON payload anymore. It's actually just a standard alert that you're trying to use within TradingView. Those are obviously not designed to execute a signal. It's just you trying to get price alerts. So yeah, it would be great if TradingView would allow you to disable that feature, because it's not helpful.
Right. Or I would love, like, drop down for all my multiple alerts, or just move the webhook to the main panel. But hey, they make a great product. Not trying to poo-poo it. Everything can always be better. Also, actually submit a support ticket for that. Let's see what they say.
Yeah, I will too, actually.
All right. So Q&A. So for our first question over here, we have, can I have a script fire a signal on one chart symbol while executing a trade on another? You want to take this, Mike?
Yeah, sure. Absolutely possible. There's a couple of things that I think are worth talking about here. One is that you can trade a different symbol, and you can also trade another asset class, or an asset, or another symbol on a different asset class. So let's kind of cover those scenarios. You could have, let's say, signals that fire on the SPY 5-minute chart, or if you're in futures, maybe the ES 5-minute chart, and you wanted to execute trades on the micro E-mini symbol for the S&P 500. So that would be MES instead of the ES symbol. Oftentimes, when we do have traders that do this, they'll get their signals from ES, but then execute their trades with MES, because that's obviously a much smaller contract. It's less risk. And they don't want to derive their signals from MES because it has less liquidity. Sometimes there's less volume going through it, and the data is a little less reliable at times. Now, that tells us that it is possible to derive your signal from ES on the chart or the SPY, whatever you prefer. And in your webhook payload, you just manually set what symbol you want it to trade. So where it says ticker in the Traders Post JSON payload, you're just going to write MES there, or MES1 exclamation mark for the front contract, or whatever expiration date you want. But the point is that it doesn't really matter what chart you're on. If you want to get your signal from one chart and then tell Traders Post to trade something else, just set the ticker manually to the asset that you want to trade. Another concept here that's probably worth talking about is that we have automatically and already mapped all of the stock tickers to their underlying options contracts. So another option you have is to get your signals from SPY or the Qs, or even Tesla. You could be on a Tesla chart and send a signal through with Tesla as the ticker. And when you configure your webhook, you have the ability to trade the options asset class there. So that would mean that you could derive your signal from the Tesla chart, but you can trade options contracts from those signals. So there's a couple of options there in regards to this question.
Perfect. All right, just to follow up on the webhook question that was asked, that we talked about previously. Someone asked here, how is it possible to keep TradingView webhook send, disable the Traders Post subscription, and get notifications from Traders Post? The idea here is that the from what I understand, the person wants to verify that the whole funnel is working, that a signal is being sent from TradingView, that is actually being received from Traders Post, but they don't want actually any trade to be executed.
Yep. So in all of your strategy subscriptions, under your subscription section, you can edit the settings of that and then just uncheck the box that says auto submit. And when you turn off auto submit within your strategy subscriptions, what that's going to do is require that you manually review and approve trades that come through. As you can see, Tom on his screen here is showing where this part is. It's in the basic settings of a subscription. If you uncheck that box and save your subscription, all alerts that come through now will show up in your notifications tab, and you have the option to review it. You can reject the trade, or you can approve the trade at that point. Now, of course, that would mean that if you got an alert or a signal at 5 o'clock last night and you woke up this morning to see these trades that need to be reviewed, and then you went ahead and approved it, it's going to execute at the market price now, not at what it was 5 p.m. last night. Otherwise, we just invented the best time machine in the world, right? To exploit pricing from the previous day.
Perfect. Okay, and then someone else Turbo asks here, is it possible to have multiple indicators for an if this then that versus an indicator webhook? I mean, there are some limitations when it comes to actually a lot of limitations when it comes to these types of conditions. Traditionally speaking, on TradingView in the alerts, it's just a is this true? Send a signal. We have created an indicator called Confluence of alerts that does allow you to have a combination of different types of conditions, but it's not perfect. So you can try it out. You can see what you like about it. It's available if you go to tradingview.io/blog. You can go find all our indicators there and go access it. Mike, I actually have to. There's a list of features that are growing now from people who have been speaking about Confluence of alerts in the support tickets and in Discord, where I go, okay, now we're going to have to expand this out. I'm going to have a V2 coming out soon, because the question of can we have multiple time frames, like the time frame settings that I included in the script are not working as perfectly as I want. So I'm going to handle that differently. Just to iterate here, it is possible to one of the indicators that actually I'll just pull it up here if you don't mind. Because it does come up again and again. I'm pretty surprised how often it's discussed. So the idea here is if you have, let's say, a Confluence of alert indicator, this from Traders Post, and let's say you have an EMA and an RSI. So what people are asking for is this idea that let's say you want to trade the EMA. Let's make this a little bit more visible and change that to 200, let's say. So the idea here is that some people want. One second, take off this chat. Here we go. So some people want to have the ability to have the indicator, for example, the RSI for the data to come from, let's call it the daily chart. Right now we're on the 1 hour. They want to come from the daily. So we had added this option to have a time frame here for every condition. So here, someone could choose the EMA, and then over here for RSI, they can choose the time frame that they want it to come from. This is not working perfectly because depending on how the indicator is created, you can't always simulate the higher time frame as reliably, and sometimes gaps show up. It's a coding issue. So the workaround for that at the moment is to change the time frame from the indicator itself, right? So if this RSI is set now to the daily, and then I use this value within the Confluence of alerts, then you're getting the time frame that you're looking for. But I am going to be modifying this I am going to be modifying the script so that we have more data that's going to show up in our data window, so that you can tell exactly how it's actually considering the information. And I'm going to be adding some additional features that people have been clamoring for. I'm not going to do the whole. I wanted to do a thing where, or someone asked if you can have one of these conditions need to be true. Like, so it's 3, but only 2 of them need to be true. So if any 2 are true, then fire it. I mean, yes, I would love these things as well, right? I would love to create these amazing products, but we're just trying to create tools. 1, to help you out a little bit to create your strategies, but 2 is to show you the types of possibilities that are out there, right? The Confluence of alerts came from discussions with Mike and I, where people had these pain points where they're like, well, I don't want to have to hire a coder all the time, and I want to be able to explore an idea to see if it's worthwhile. So we want to create that for you, but there was some limitation in time in order to do that. But very happy to see that everyone's very interested in it.
Yeah, and I think it was a fast way for us to try to provide some help there too. One of the things that's going to take us a little longer is to integrate these types of requests into your strategy subscription, where you can send different types of alerts. And if multiple alerts are combined together, then it triggers an event within Traders Post to go ahead and execute the trade for you. Those are definitely ideas that we've received a lot, and have thought through on how to design within the environment. But they're much further down on the roadmap.
Perfect. Well, this as a test to using the indicators and people's experience with it as a test to figure out, okay, these are the actual features people want to use and we should integrate into Traders Post. I really love that funnel. All right, next up, we have a question that came from, actually, this is a question about Coinbase, and someone was asking if it's possible to set their strategy to purchase at whatever the minimum order amount is for plus some offset. So with crypto, since you could buy any nominal amount, there is a minimum threshold on Coinbase. I believe it's 10 USDC. So basically around $10 that you have to buy, or your order will fail. And so the customer was asking, is it possible to automatically grab that number? So as it is, we can't automatically grab the number from there. You're going to have to manually input that. And even with the offset, you can't do that. So I just wanted to iterate it here, just in case anybody else had that issue. It's something that I figure only really comes up with crypto, because you can have these fractional positions.
Yeah, so I think the best way to handle this at the moment is to look at your strategy subscription settings and choose the percentage of portfolio option. So if I have like $1,000 Coinbase account, for example, I could choose 5% of my account with each trade, and that would ensure that $50 is traded each time, which would obviously be well above the minimum trade amount. If you want it to be closer to that, then you just have to try to get your percentage as close to that as possible while accounting for fluctuations in your balance. So maybe twice the minimum might be a good place to start. If you have, like, let's say $100 account and you set it to 20% of the portfolio, then we'll take $20 for each trade each time. And that might be an easier way to dynamically adjust the quantities for each of those Coinbase positions.
Next up, we have a question from Hong Fei from Discord, who asks, hey guys, does the site offer trading strategies, or does it only function as an API machine?
It's the latter. We are more of an API machine. Our job is to focus on the best way to execute your orders. So that means that it's a bring your own strategy type of platform. You can find those strategies within the TradingView environment, TrendSpider, Research, Python environments. There is so much. There's such a large world of trading strategies out there that I think our thesis is that if you've been down this path long enough, you most likely have a thesis and approach to the market that already works for you. That said, we are looking to expand into offering some basic off-the-shelf strategies, but I think they are going to be a little bit longer time frame, more centered around portfolio rebalancing, sort of mixing a basket of assets rather than intraday scalping strategies, things that are very fast paced. Those are harder to get right and harder to sustain over the long run.
I find it very fascinating, both for in Traders Post support as well as in my when I'm creating scripts for customers. The question always is, well, you guys have been doing this for so long. You must know all the good strategies. Yeah, I know you're sitting on a handful of them that are 100% guaranteed to be profitable all the time. So just sell those to me, right? You guys have all the information for people who are successful. So take the first top 10% and sell those strategies to us. That's not how that works. There's a lot more. There's a lot more to strategies than you know picking one off the shelf and running it for the next 6 years, which I always find to be very humorous.
I do too. I think it's probably also worth pointing out that we don't look at our users' strategies. Whatever data you're sending to us, all we really have is the order data that comes through, which doesn't allow us to really reverse engineer what it is that you're sending to us or where you're deriving your signals. Moreover, it's in our terms of use that we're not interested in trying to understand your approach to markets or anything like that. Our job is, again, to try to execute your orders as best as possible and ensure the best way to automate your strategies on the market. So your approach, your data is really your data. All we really have, to be perfectly honest, in our system is a whole lot of noise. I don't know that there's much we can derive from that.
Yeah, in fact, now that you mention it, it never even comes up in our meetings or anything. I've never heard any discussion or seen any messages like looking for which strategies perform better than others. It was pretty fascinating. Never even crossed my mind. All right. Last up question here comes from Discord as well, from Andy UIOP. Is there a way of pausing the auto session refresh? Sometimes I need to log into Interactive Broker's website and Traders Post keeps kicking me off. So this is one of those the situations that comes up with Interactive Brokers because you can only have one session open at a time, and so the idea is that when Traders Post is connected and executing trades on your behalf, it's constantly, I believe it's every minute, right? It's constantly requesting information or pinging the server to make sure that it's connected, and if you're connected, you log into your Interactive Brokers account, well, then Traders Post can't connect, or rather, it kicks you out of your session. And so you have this thing where you're constantly logging in, and one person's kicking out the next person. We do have a workaround for this, which requires creating a second user on Interactive Brokers. So you create a second user, and that person can log in. You don't have the same issue. You can actually find more information about that on our in our documentation. I think I'm going to just pull that up here so you can see.
Yeah, and I want to vent about this because it drives me nuts. My Roth IRA is with Interactive Brokers, and I've been a long time Interactive Brokers user. Our little solution for creating multiple usernames is helpful. It allows Traders Post to execute your trades and allows you to log in at the same time. However, it's still going to steal market data. So if you keep logging into your Interactive Brokers account, you're going to notice that you have to log in order to get market data. But if you do that, then Traders Post loses the market data at that point. And the only way kind of around that is if both users have purchased market data, which obviously requires an additional cost on the user. So we are looking for some options there. And the idea of pausing the auto session refresh is something we've explored that allows you to temporarily deactivate the session on Traders Post so that you can manage your Interactive Brokers account and then go back in. Now, hopefully, you don't forget to do that. And then when Traders Post needs that session, it's not able to recreate it. So we're trying to figure out the best solution there to deal with the way Interactive Brokers handles this, which again is kind of unique to other brokers. It's their own little special brand of operating.
Right. All right, let's take a look over here in our chat. Sylvana was asking, is it possible to use...
Actually, I want to back up. Ezra actually asked if he's noticed that he has a strategy and he's let it run with auto execute, but he had an issue where the webhook was sent to Traders Post, but he doesn't see it on the chart, and he's trying to figure out what was the root cause for it not showing up on the chart, even though the alert came through. I'm gonna, without looking at your account, I'm gonna venture to guess that this is a repainting issue. So what has happened is, at some point in the candle where you're deriving your signal, the alert was valid or the signal was true, meaning that the candle was in the correct structure. Maybe the high was high enough or the low was low enough. And that causes the alert to trigger in the middle of that bar. And so what probably happened is an alert was sent because that condition was true. And then before the bar closed, the condition wasn't true anymore. And so when you go back and look at the chart in retrospect, it looks like there was no alert there. So the best way to solve this problem, or to even go back and retest it, is to use the bar replay mode and see what happened in the middle of that bar. But then also confirm that you're sending your signals at the close of the bar rather than in the middle of a bar, which will ensure that, you know, when you look at the chart historically, all the signals that you expect to be there will be there.
Yeah, there is a downside for that when you're dealing with longer time frames, that you might not want to wait for the bar close. So I get there's a trade-off for that. And I've also been in situations where if I'm running my strategy real time on TradingView, my signals are firing the way I'm expecting it. I'm seeing everything on the chart properly. But then if I were to refresh the chart or look at it later on, it reloads. Well, that event didn't happen in the same way, and so it doesn't look on the chart the way that it did before. These are quirks with these systems you have to deal with. But to me, the source of truth is the signal, right? The signal only fires if the price actually did cross that point. And so I use the log to make sure that if I'm seeing an alert in the log, I go, look, at that candle, at that time, it actually did occur. And that's what I rely on.
Yeah, that's a fair point. And obviously the alert log should show you when that event took place in TradingView. And if you go back and look at that candle, you should be able to kind of determine if the condition should have been true at that point. Again, I have found that using bar replay helps determine if there's any type of repainting that takes place, because you'll see that as you skip to the next bar, TradingView will send you 2 or 3 price updates within that bar, and sometimes you'll see that your entry appears and then suddenly disappears, and that's a good sign that it's repainting intrabar.
Next up here, Sylvain asks, is it possible to use Traders Post to send orders to TradingView's paper trading account? If I'm not mistaken.
Interesting question. Yeah, I don't think I've had that one before. No, there is no way to do it. I don't, as far as I know, and we've spoken to the TradingView team, they do not have any kind of API that allows you to access any part of their system. I've seen some people kind of hack around this by investigating what APIs are occurring in the background. But as far as we know, and with the agreement we have with them, you know, we're following their terms of use, which explicitly states not to do that kind of stuff.
Yeah, and not just the paper trading account. Any type of a broker integration that you're seeing right now on TradingView, there is no that system is completely separate from PineScript, completely separate from the alert system. You cannot tie anything to that. It's a standalone, which I hope one day changes, but for the moment, that's how it is. Someone's asking here, Toro was asking here, does interactive brokers prevent you from using stop and take profit on the futures? I don't know this offhand.
I don't think so, but we don't actually support futures with interactive brokers.
That's right.
At the moment, we just support stocks and options. Actually, I don't know that I've used options with interactive brokers. Yeah, it's just stocks.
Excellent. All right. All right. Lively group of questioners today. Always love to have your questions. So that'll be it for the Q&A portion here. Obviously, if you have any other questions you want to ask, you can ask in support tickets. You can send it on Discord. You can tweet it out. or of course, wait till next Friday to jump on office hours. So thank you very much for participating there. We'll leave that be, but there is one last thing that we wanted to go over, which was just to let people know that we do have our blog, right? I don't know if how much we've been talking about our blog on office hours, but if you head over to traderspost.io/blog, you'll be able to see a lot of information about. I mean, here first of all is where you're going to access all the different types of indicators that we've put out. So we do have indicators that for the moment are just accessible to our community members. So you're welcome for creating those for you, and you're the lucky few in order to get things behind the curtain. And then we also take your feedback in order to make these better. But then you can also we have also quite a bit of content that we've created and that we will continue to create that'll help put you in the mindset of how to think as an automated trader. I mean, as a retail trader in general, but obviously specifically geared to algorithmic trading. And Mike wrote a post recently called "Running Automated Trading as a Serious Business," which I think warrants some discussion because it hits on this idea that of 95% of traders fail, right? We're failing in our trading habits, and the question here is like, why and how do we mitigate that, right? That's the whole thing, right? One of the reasons why you're going to be that you might be thinking about automated trading with Traders Post is because you're thinking to yourself, I'm one of the biggest variables of pieces of volatility in my strategy, and I need to be able to curb that. And so you set up these automated systems so that they trade on your behalf, and you're focusing after the event, you're paying attention to how your trades went, and you're modifying the strategy. But whether you're trading manually, semi-automated, or fully automated, you are still you, and there are still vices that show up, and some of your worst qualities that can be amplified because of it. And so Mike here talks about this idea of treating your well, I'll let you pitch it. This idea of treating yourself as a business when you're trading.
Yeah, sure. I think it's going to bother me if I don't answer the questions from Ezra and Turbo real quick because
Oh, sure, of
we
course.
got a few last minute ones before we kind of launched into this topic. The one that Ezra came back with was he appreciated that we had a reply on repainting, but he is sending the signals at the close of the bar. If that's the case, I totally get it. There might be something else at play. I guessed on the idea that it could be repainting. If you want to hit us up at support@traderspost.io, we're happy to look closer at your account and see what's going on there.
Yeah.
And
Very
obviously,
useful to export your alerts. So I don't know if a lot of people know this. You can go into TradingView in the alert section, top right. You choose export CSV, and all your alerts will come out. And I mean, pairing that with actually the signals that come from into Traders Post is super useful.
absolutely, yeah. Any data you can provide on it, of course, is super helpful, along with the trades in your dashboard. Um, Turbo asks, is futures something we're planning on adding? This with interactive brokers specifically. This is an interesting topic. We wrote the entire system for futures and had it ready to go. We had it in our staging environment. And then we spoke to Interactive Brokers compliance team. And it turns out that we're not able to execute futures contracts through their system because of kind of a compliance glitch between us and them. It has to do with the operator ID that registers with the CFTC. And right now, the way their API works is it doesn't send along that operator ID properly so that the futures exchanges know who's actually executing the trade. So it looks like we're executing the trade instead of you executing the trade. And that's preventing us from being able to do this. So they've pulled futures support from the API, and it's kind of on hold at the moment. As far as we know, this is a indefinite problem where we're not quite sure when they're going to come back and let us know that it's something we can onboard. But as soon as it becomes available, we'll certainly resurrect that code that's already complete, already ready for you to use, and get that back up and running again. And then Turbo's follow-up question is if there's any update with the Charles Schwab API. We are in contact with the Charles Schwab team. We recently had a discussion with them. It's still on hold. We're still in the process of getting approval, but it's going to take some time. As with many relationships we have with brokers, sometimes those conversations can can take weeks or months. Any brokers for futures, Traders Post or anyone else, we are currently working on several different crypto brokers. Tasty Trade is also in development at the moment for options, but specifically for futures, we're going to take a look at the broker planning map next in the next couple of weeks to see who we want to add. If you have somebody specific that you'd like to see on the futures brokers list, feel free to let us know. So Ezra, we'll follow up with you if you don't mind reaching out to us directly on your problem. We're happy to look at that closer. So this topic of the blog post that I put together, I think I'm glad you brought it up, Tom. I think it's an interesting conversation around the idea of treating trading like a serious business. And I know what was interesting about it is after I launched the article and I had you review it, it prompted a really interesting conversation between the two of us where we kind of walked through some of our own individual experiences of being discretionary traders, the pains of massive drawdowns, the pains of losing all your money in an account, how to crawl back from that, and maybe even the approach we have about how we see capital in general. And I think we've agreed that, like, if it's your own money, more often than not, and it's money that you've decided you're comfortable losing, then you're willing to take much larger risks from it. So one of the opening lines of this blog post that I put together is, what would happen if you treated your approach more like a business and you had to report to a board of directors? You know, if you were to start a business of your own and you had trusted advisors and a board of directors that were, you know, checking in with you on a regular basis to make sure that you're executing your plan the way that you expect it to, it would look pretty bad if you know, you started a small shoe shop on Amazon and had your own website and everything, and you went to your board and you were like, well, look, I had about 25,000 in cash, and I took a huge risk on a pair of Air Jordans that I kind of knew might have been fake, but I thought they might be real, and it turns out they were fake, and I lost the whole $25,000. Well, maybe the first time that happens, your board's going to be like, okay, that's really bad. How are we going to make sure we don't do that again? But the next time that you lose 25 grand, it's not going to look so good anymore. And now you're having tougher conversations. But that level of accountability, I think, can play a pretty big role in managing risk. I remember my interview with Brent, another futures trader. He actually reported to his wife for a number of months when he first got started, just sharing kind of where he was at. He had rules in place. One of his rules is that he didn't trade more than 2 contracts in a day. So you might have a trade in the open, and maybe he'll come back and trade the second half of the session. But beyond that, if he had 2 losing trades, he's done for the day, and he comes back the next. You know, live to trade another day, if you will. So I think a big part of the automated trading strategies is that it makes sense that one of the reasons we get into this game is that or do things this way in particular is that we want to remove some of that emotional response to drawdowns and risk, and we want a system to automatically manage those things for us. But the reality is that we still introduce a variable that we don't really account for in our strategy. And without establishing some kind of plan for how we're going to handle our own decisions, you're very likely to go in and intervene in a working strategy. I think I tweeted about this recently in my personal Twitter, where the idea of like setting up a strategy that you back tested on 10 plus years of data, and you did weeks and weeks of walk forward testing, only to turn the whole strategy off when the first trade comes in and it happens to be a failing trade. It just doesn't make any sense. You know, you want to let it cook. You want to let it run for long enough for that strategy to perform. And so if you are to intervene in your strategies, then you're introducing a risk variable, and that risk variable is you. You're going to have to figure out how to deal with your own choices. So the idea of having a board, to get back to the point here, sorry, this is really long-winded, is that it allows you to, or it forces you to kind of think about things from an accountability perspective and having to answer for some of your choices. I think hopefully it slows you down in making too many decisions, you know, potentially over trading or loss chasing, where you know, you're aware that if I make this choice, I'm going to have to answer to it. But I want to open this up to you, Tom. I know our conversation was really interesting in terms of like whether or not that's truly useful or not. Maybe sometimes we prefer to take risks the way that we want to take them, and we don't want to have to necessarily answer to them. But if you did have a trusted advisor, it better be somebody who gets it. It better be somebody who's another trader who's lost money trading, who understands the risks associated with this stuff, so that they can kind of walk you through it. What are your thoughts on it?
Yeah. So when you initially showed me the article, my hackles went up because I thought to myself, how dare somebody tell me what to do when I'm trading? How dare someone look over my shoulder, or that I have to go explain to somebody else what I'm doing? This is my money and I get to trade it my way. If I want to lose it all, then that's up to me. And it's exactly the same feeling that I had when I used to gamble all the time. I used to go to a casino every week. I get my paycheck, I go to the casino, and obviously I would come back to the casino with $0. And I got into this habit. It's sort of like $0 is the normal. The failing trades to me become sort of like, well, of course, I blew up my account. Of course, I lost money on that. Like, that's part of the game, and you can look everywhere and you can see the stats of, yeah, you're destined to lose. The fact that I stayed in as long as I did is a victory in and of itself. And so I found that the winning is just fuel in order to continue playing the game, right? And then eventually you fail out. And articulating that with you made me feel so uh hypocritical, because I'm ostensibly talking to other people as if my goal of being in the markets is to make money, to understand cycles, to understand the dynamics of buying and selling, to understand how to trade profitably. But inside of me, I realize, no, but I am perfectly fine with failing. And if you start a business that way, that's where the article really touched me, because if I did treat it like a business, I would have to literally throw out everything that I'm doing, right? Because the whole thing is that you wanna have this sort of like Eric Ries style lean startup build, measure, learn loop, that you're trading any particular strategy to figure out, okay, is my analysis correct? Have I instituted a set of rules that could then ultimately return a profit again and again and again, right? Just like if you're going to start any business, you want to sell lemonade at the lemonade stand. Well, you got to make sure that your costs are lower than your income is higher than your costs, and that you're making a net profit, or else why sell lemonade? And if it works for a little girl, little boy at the corner of a street, then you should have the same sort of idea for yourself as well. And that lemonade stand is a business. Well, if I'm not treating my trading with the same level of conviction as I would selling lemonade at the on a lemonade stand at the side of the street, um, then what am I doing? Like, what am I doing? And so it's sort of funny, the conversations you and I've been having, and even in the meetings that we have with the team, where we end up, so many of us are traders. It's hard not to every once in a while like talk about what kind of trades we're in. I feel that accountability has been absolutely invaluable. And so just one, getting over that hurdle of, okay, you want to have the accountability, you want to be able to treat this like a business, which means you have to have a completely different mindset than being at the casino. You're not at the casino, you're doing something else. And the way that you described it, for example, inside the article, is having a board, having people that you're accountable to, friends, family, a group online, and I found out to be super super helpful. I don't know if I think you're also we're not part of the same groups. I don't know why not part of the same groups, but I have my Telegram group, and I use my Twitter account where I will tweet out essentially, like, if I'm going to be trading a channel, if I'm going to be trading a thesis, I tweet it out beforehand, because it requires me to specify, these are my entries, these are my exits, this is what I'm thinking, this is how I might fail, put it online, and then if I fail, well, it's there. It's there for everybody to see. But I think having like a mastermind group, board members situation would make a lot more sense and make me more profitable faster, because just speaking with you every week has made me profitable. Just articulating the failures that I take makes it so that the next time I'm about to press the button for the failure, I go, but I don't want to tell Mike about this. I don't want to talk to them about how I did it again. So let me just not do it. I'll only do it 5 times out of 10 as opposed to 9 times out of 10. And that turns out to be how you become profitable. I looked at my numbers. I was like 57% profit, and it doubled my account. I was like, okay, this is
All right.
pretty good.
Avoided risk. I like it. I love it. Yeah. It's I think it's such an interesting topic. One of the responses we got on this particular topic. How do I do a Twitter post? Is that something we can show?
Well, I could show the post that you sent me before.
Mm-hmm.
Yeah, so I have it here.
Yeah, yeah, this is the one. So he says accountability is key. It must be a group that you're comfortable with to probe and criticize and disagree. I think that's the point here. Like, if you're going to have some trusted advisors review your strategy on a regular basis and review your results, it's got to be somebody you're comfortable with. Like you and I are comfortable with each other. I'm willing to share, my results with you and vice versa. But really, it has to be somebody who's not going to judge you because you had a big loss, and they're going to look at you and go, well, why did you do that? And I know we talked about this last week. Well, in retrospect, it looks like a really dumb decision, but at the time, it was the best decision I could have made. It was the best decision I should have made. It's really easy to look at your results in after the fact and assume that you could have made a better decision. We don't know what's going to happen the moment we hit that buy or sell button. We hope we do, but we often don't. And so whoever you're speaking with needs to understand that and be compassionate to the idea that at the time you really did believe that was the best decision you could make. And even if it wasn't, you still need to be comfortable explaining, I put this strategy on and I increased the risk, and I think I might have gotten a little bit too gutsy or a little overconfident in this approach, and I'm willing to address that potential error in my thinking and not be embarrassed about it. That's a tough one too. You got to find somebody that you can really trust to be candid with your decision making with. But he also suggests in this tweet, it makes me think maybe you should peer review before deploying your strategy updates, and that would be huge too. So to my point, if I decided, I think this strategy is going really well, I've got like 6 weeks of performance here, it's crushing it, I'm going to go ahead and 10x my leverage, and I'm going to start trading NQ contracts instead of MNQ. I could review that first and explain my thinking, explain like how I'm going to manage the excessive risk that I'm now taking on, especially if my account size is pretty low. And in doing that, it kind of helps me determine, maybe, is this the best idea? I don't know. Maybe this is not the best idea. I'll tell you this much: the brokers do not care. They're going to let you trade whatever you want to trade within margin requirements. So they are not there to check you out and make sure that you're doing everything properly. So without someone like a trusted advisor, you're in an area where you're welcome to be as dangerous as you want to be.
It's funny, the treating it like a business, right? So one of the first things you're doing is, okay, what is the product you want to bring to market? What's the problem you want to solve? And I thought that for trading, that the problem I wanted to solve was making money. It's so weird to say this. I know that's not what my goal is. My goal is to be in the market, to be exposed to the market. And you put that sort of like inception bug in me a couple of weeks ago with the whole hedging strategy, this whole always long, sometimes short. Mm-hmm. And I realized what I want is to be exposed to the market, to be exposed to the possibility of making outsized gains. I wanted the optionality. So one, I want to be part of the market. So I wanted the always long helps me with that. And then I also want to know that if the market moved 20% in one direction, or I'm thinking crypto, 5% in one direction, that I could have gotten that. There was something there I could have gotten. And so the win, I'm trying to be there for when those things happen. So I started doing this thing this last week where, and I'm sure we'll talk about it more, where I'll put on, I cannot close my positions and walk away. I just can't do that. It drives me crazy because it's always then you do that, and then 2 hours later the move happens that you're waiting for, and it drives me crazy. So what I do right now is that I'll put on a trade at the end to stop myself I call it my FOMO trade, where I put a trade on that I expect will lose. So I know that an amount, it's a small portion of whatever I made that day, and I'm going to lose that money. But if it does succeed, I'll make like 4x. I trade 50x leverage. That sounds crazy. I know that's how I trade. And so then I walk away. And then when I come back, if it lost, okay, I just lost a small percent. And if it wins, I feel so great. And I find that it lets me play with my kid and like hug my wife. And I was like, oh my God, I could watch something because I know that I'm in the trade and that I'm exposed to that optionality. And it's been a game changer to me. This FOMO trade, just put it on and walk away.
It's I guess it's kind of like a lottery ticket, right? You don't have to check the numbers every time you buy a lottery ticket. You just wait for the lottery to draw and then check your numbers after the fact. And there's always that chance that we're going to get one of those big payoffs. I guess that's how I feel about put contracts. If there's a particularly low volatility environment, premiums are pretty cheap. There's a really good chance this contract's most likely going to expire worthless. But if the market tanks from here, I've got this tremendous upside, which is really going to help drawdowns in my long portfolio. So I hear it. I'm right there with you. I think that's one of the other benefits with automated trading in general is this idea that I've already decided what the risk parameters are. I've already decided how I'm going to manage everything. I have all the signals in place. Now I can just walk away and let the strategy do its thing and put my focus into something else, work on the next strategy, the next asset class, whatever it is. So I sense that freedom that I think you discovered by at least deciding that you had some options left on the table so that you didn't miss that exposure to a potential move. You don't necessarily have to be completely unexposed to the market. But if you are, at least set yourself up in a way that you can walk away and not have to think about it. You can come back and check the results later.
There's a thing that also that when you mentioned the idea of treating it like a business, it immediately made me think because you were thinking like real people, and I'm a coder, so I only think about talking to computers, and so I immediately thought, oh, I could create AI agents that represent different aspects of my personality and have different objectives and goals and check me, and then run my trades by them.
Yeah,
Now, the short version of this is I don't know how much do you. I did introduce you to Open Interpreter, right? Where you can run AI on your computer
on
and
your
have
desktop. Yep.
access. Yeah, you can have access to your files. I don't know why I didn't think about this, but you can run it within a terminal in VS Code, and that way it has access to all the files in that directory, and it could like actually build out files and grab information. Like you're seeing, you're not just interacting with the AI, but it's also outputting things for you to consider. And so, for example, I could be have the interface open, do a grab all the data for all my trades that I did recently, toss that into a CSV file inside of the folder, and then one of the AI agents will analyze it and go, hey, you should stop trading, or you should take this trade, or it'll look into it more, and you can have multiple terminals open for the different AI agents that are all have the different flavors of personality. I'm even setting up right now that it's like taking a page from John here. It's using Tailwind CSS in order to put up a dashboard and live create a website for me that says that because I really wanted to feel like a video game. That's essentially what I wanted to do. I wanted to be like I'm playing Civilization or Age of Empires or whatever, and there's a screen there and it's showing me. So I think the I want to take this using it, treating this as a business to heart, and really, but I can't really look people in the face directly to tell them that I failed. But I will listen to AI. It turns out I will listen very much to AI if AI tells me something. I'm gonna have these four my board members that will be these four people, and then talk to them as I'm trading throughout the night, and then they'll be able to guide me with my trades. But to have it
Yeah.
within VS Code that so that it can actually output and create documents and store information within like a makeshift memory, and then retrieve it the next time that I'm trading, so it doesn't forget everything. I think it will be a game changer for me.
Yeah, I think that's a solid way to handle this problem. And I know we talked a little bit about it. Maybe it's something we build into Traders Post at some point too, where you've got this AI risk manager that's your confidant. An AI agent that understands trading, understands your approach, understands what you're trying to achieve, and you can just check in with it and make sure that you're staying on track. So when you open the dashboard, it pops up and it could reply to you and kind of take a look at all your strategies, see if everything's moving in the right direction. Hey, I noticed that you paused this strategy. What happened there? Is it truly a dead strategy, or did you just get afraid because, one failing trade or something like that. And then, let's say it's more compassionate than I just said, but let's say that it's better versed and has a little bit better bedside manner than I do. And it can walk you through some of your decision making. I think that there's value in a lot of that. Because again, I'm very convinced that the biggest risk variable in anybody's portfolio is their own choices. Because you're already getting the risk from the market. If you buy a portfolio of stocks, you're going to get the risk from the market. But if you keep, buying the top and selling the bottom over and over again, then that's a risk that you won't normally see. That's operator risk, right?
That's
So,
right.
yeah.
Well, I'll end it here, but I just wanted to say that the my introduction to Traders Post, it was my first introduction to automated trading, and to automate your trades, it means to some degree knowing what the outcome will be. Like, you'll know that out of the 4 different things that can happen, it'll be one of these 4 things that happen. Maybe it'll be the max paying trade, maybe it'll make profit, maybe you'll be in the whatever it is. And so I using Traders Post as it's this educational process that I didn't expect it would be, because setting all these different components up, setting all these different settings up requires you to know answers to questions you weren't asking before. So I think if anyone is in the middle of their journey, or at the beginning of their journey for trading, and you're wondering if automated trading is for you, um, it's an educational process, the likes of which is hard to compare to anything else, because you are being accountable to yourself, your future self, and your past self now, in a way that paper trading, or manually trading by hand, or doing a prop firm challenge, or being part of some group, or whatever it is, it's not gonna help you. So to me, I'm seeing Traders Post as like a teacher in my process, for which I'm very happy and grateful.
I love it too, and I'm learning new stuff as much as possible, and I learn from our users as well. I'm learning from you, Tom. Like, there's the resource that I think we can create here is one that takes the collective wisdom and translates that into a process that improves your results over the long run. We would hate to build a platform that basically just sets people up for gambling away all their hard-earned money, and that's not what we're looking for.
That's right. That's the first thing you told me. You want everyone to be successful in this. I go,
That's
yeah,
right.
that's a great goal.
Yep.
Perfect.
Absolutely.
All right, so we'll leave it there for this week, April 19th, office hours. As always, it's fantastic to hear from the community, to hear what you're thinking about and how we can make the product better for you. So you can expect us here next week. Make sure you post those questions, and we'll come back with even more engaging conversation. So have a great weekend, folks, and have a great weekend to you, Mike.
You too, Tom. Take care.